major news for those who are looking to buy a new home. As of November 15th, mortgage giant Fannie Mae has scrapped its minimum credit score requirement of 620. Now, this move could potentially allow more Americans to qualify for loans from lenders who review borrower information through their current underwriting systems. This expansion also gives new opportunities to borrowers with so-called thin credit files or non-traditional credit histories. Here with us now is Bobby Rebell, a certified financial planner and the consumer finance expert at badcredit.org. Bobby, welcome. Good morning.
Thank you for having me.
We were talking about this yesterday. This is pretty big news for those who have always dreamed of being a homeowner but just misqualifying through Fannie Mae. What is changing here? What does this mean for so many consumers out there?
Well, you're absolutely right. This is a big deal because a floor has been removed. So it used to be sort of an up or down vote. You're in or you're out, 620, that is it. The difference here is now they're going to take a more holistic approach, and that's going to be more inclusive, as you mentioned, to people who maybe have a thin credit file, who maybe wouldn't qualify with just the hard stop at 620. Now they're going to look at other factors. They might have to have a larger down payment. They might have to have more cash reserves. It's not necessarily, this is important though, it's not necessarily a change in the underwriting standards. You still have to be a good risk for the lenders.
This is giving me the great financial crisis vibes when we opened up credit standards or lower credit standards, no stated income, could work on Mars or on, Jupiter. It didn't matter. You get a house, I got a house. You can have 2-3 houses. I get the fact that they're trying to get more people into the market. What this can do, though, is this could have a negative effect on the housing market, right? This could ultimately increase prices, right? Because now what's happened is we don't have a lot of demand for housing. What do I mean? There's not enough buyers, right? The housing market depends on new buyers every single year coming into the market. That has stopped. New buyers aren't buying anymore. They're renting. And because you don't have a demand, housing prices are going down, right? And houses are staying on the market longer. So sellers are having to adjust their prices and ultimately keep the houses on the market longer, as well as allow for prices to drop. But back to the consumer, in 2008 when they opened it up to credit standards, a lot of people jumped in the market. It was kind of like hot potato. Everybody was able to get a house, but we quickly found out when you have these credit standards opening up, you actually are allowing for the increase in defaults, right? It's a risky business, right? When you allow for weakened underwriting, overextended borrowers, because now they feel like they can afford more. And then obviously you're going to get higher future default rates. I like the ideas, Fannie Mae and Freddie Mac. I mean, I'm not really saying I'm opposing it. I just know the last time we did this, the economy collapsed, right? And in a very short amount of time. I think this happened from, 2005 to 2009. It wasn't like it took a very long time. People got in over their heads way quicker than we thought it was going to be possible. I remember with a good friend of mine who bought a house during that time. I mean, we were all excited. Young boys, 24, 23 years old, 25. And it was like the party house. We would go hang out, everybody was over there. It was him and his brothers. And so every day we was over there. But one of the things I saw is I would see their mortgages. I remember their mortgage specifically being like $900, probably $900 to start. I was like, oh my God, this is crazy. Obviously, they were only paying interest. Over the course of, the year, I'm going to say 2 years, I think I was consistently going there for about 2 years. Like, I would see the mortgage interest just creep up. It went from 800 to 1,000 to 1,500 to ultimately it went to like $4,000. And at that point, they just couldn't afford the house anymore. So they, obviously let it go. I don't think that's what's going to happen here. I don't think the interest rates are just going to, go through the roof. But I do think you do get a riskier buyer. Now, if it was up to me, everybody could have that chance to own a home. Combine this with maybe a 50-year mortgage. Maybe you protect the buyer a little bit more, right? Allowing more people to come in with the 50-year mortgage. Longer term, most people refi houses anyway at some point, so the pushback on a 50-year mortgage doesn't really make sense to me, especially if there's going to be interest rates that come down in the future, because most people are refining between 7 and 10 years anyway. What do y'all think? I mean, this could be a great opportunity for a lot of Americans to get in, at a younger age. And I think, it could be cool, but man, 2007, 2008 could happen all over again.
Yeah, I was wondering about that. I'm sure it's a lot more than just the credit score changing. What kind of impact could this decision have on the housing market, Bobby?
It could have a huge impact because, we've got such a tough time for people who want to become new homeowners. And this is something that can really open up a lot of opportunity for them to get the financing that they need to get into that first home. People that don't have a long credit history, right? It just might be as simple as they haven't been alive that many years to have developed a long history of having credit and having that bigger file to look at, right? So this is going to allow them, if they have other resources, if they're good employees, if they pay their bills on time, different things. It opens up the door to borrowers with lower credit scores. And you don't always have a low credit score because you did something wrong. It just may be a question of the circumstances, the things that you've been doing in life. Maybe you've been a student. Maybe you've just been doing.
I think this is like the perfect person, right? Well, maybe you don't, you have a great job. Maybe this, maybe that. I just think that right now in this economy, people are still kind of getting over the pandemic. People are still kind of reeling from these higher prices we had the last 4 years. I think there's a lot of maybes here. And ultimately, what is it going to do? It's going to get new buyers into the market. Are they ready? Maybe, maybe not. Do they want to own a home rather than rent? Absolutely. So them jumping into the market earlier than, typically expected, I get it. I think when people own a home, though, they're more likely to want to make decisions to keep that house. Again, I don't think this is going to be the subprime lending situation, but it could allow for people getting into this market faster than what we think. I don't think it's a bad idea. I just think people need to be careful and really understand what they're getting into. Owning a home is a lot of work. Obviously, there is that, that term, going house poor. But, I mean, you have an asset, and if you use that asset correctly, you could definitely use it to build your wealth. And so I'm for it. I don't like the hints of 2007, 2008. It just gives me the heebie-jeebies a little bit around like what could happen in the future. Could the economy collapse if people start to default on these things? If home prices go higher, will home prices come down? I don't know. I think the one thing I would like to see with this as well is more houses being built. I think if they open up this market to new home buyers, they have to build more houses. I don't know if the houses are going to be built fast enough for home buyers to come in. So that's going to be interesting. But let me know what you guys think in the comments. I'm really interested to see how the new rule affects buyers and how many buyers come into the market and if home prices continue to rise. With that being said, guys, this is Saving America's Money. Be strong, be safe, and save America's money. I'll talk to you guys soon. Peace.